Is UK buy-to-let worth the effort in 2021? Well, that all depends on where you are in your property journey. Whether you're a new investor, whether you're an existing investor with a few buy-to-let properties, or whether you're an old-timer who's been in the game 10 plus years. So in this video, I'm going to answer this precise question, is buy-to-let worth doing in 2021? And I'm going to apply it to where you are in your property journey. Hi, I'm Ranjan Bhattacharya. I've been investing and developing properties for over 30 years. You may have seen me on the hit Sky TV show Property Elevator, or you may have attended one of our Baker Street property meetups in central London. If you're new to this channel, make sure you subscribe and smash that bell icon so you get notified as soon as we upload new content. So you may have seen a video that I put out about a year ago, 3 reasons why buy-to-let is dead. That video has had over 100,000 views, more than 1,300 likes, and about 450 comments. So that video really addresses the political changes and the changes in taxation and regulation and that kind of thing that have really been the trend over the last 20 years. In this video, I'm specifically answering the question, well, in 2021, is buy-to-let worth doing, whether you're a new investor, an existing investor with a few properties, or an old-timer? Now, 2021 is posing all sorts of interesting issues, mainly thanks to COVID-19. We are actually seeing rental demand up in all areas apart from London. London is seeing a massive softening of rents. And also because of COVID-19, there have been mass redundancies, many people on furlough, rental arrears are at an all-time high. Also, we have the Section 24 tax grab continuing to bite the unincorporated landlord who does not own their rental property in limited companies. We've got increasing regulation. Many councils are looking at additional licensing schemes to basically money grab and grab a license fee from you for any property that you let out. Some of the councils who were due to introduce these license schemes have granted a temporary reprieve by saying we're not going to bring these into force until after the COVID-19 pandemic, but they're still coming. So against all that backdrop for 2021, is buy-to-let still worth the bother? Firstly, let's look at the outlook if you are a brand new property investor looking at getting into buy-to-let in 2021. Now, if you're looking at getting started in property, it still is true today that property is the best way I know of creating long-term wealth. And if you do it right, property wealth can be created literally out of nothing. If you're starting out in property, you're doing so with a blank sheet of paper. You know the tax rules, you know the regulatory environment, you know you invest with your eyes wide open. You have the advantage of being completely fresh and nimble without the juggernaut of an existing portfolio of properties to navigate your way through various changes that have taken place over the last few years. If you're starting out in property in 2021, what you want to get clued up on is the BRRRR method. I've done a video on this, watch this, digest it, watch it twice, let it all sink in. Basically, BRRRR is when you buy a property below market value from motivated sellers. You renovate it to add value to it. You rent it out to generate positive cash flow. You refinance it to pull out nearly all or all of your money. And then you repeat the strategy and go again. Now, many of you guys are watching this video and you're not subscribers to this channel. We put out new videos each and every week, all dedicated to keeping you on top of your property game in 2021 and beyond. So do that now, subscribe and hit the bell icon. We'll tell you as soon as we upload. Also comment and bear in mind, of course, I answer as many of the comments that I can, but I give special answers to those who are subscribers, so subscribe now. You see, when you do the BRRRR strategy and you do it effectively, this is the thing. You literally acquire property cheap, you do it up, you refinance it, but you have little or none of your own money invested in that particular deal. Now, what that means is if you're making positive cash flow and you have no money invested in that deal, your return on the cash you have invested in the deal is infinite. Where can you get an infinite return on your money? Now, buy to let is more hassle than it was 10 years ago, 20 years ago. That's a fact. But if you're generating infinite return on your cash, then that's great. It's worth the hassle. So once you've bought a property using the BRRRR method, it's generating positive cash flow so you can service your debt and your maintenance costs and that kind of thing. All you got to do is sit on it, hold it tight, because eventually what you'll see is long-term capital appreciation as we go to the next phase of the property market cycle. And then you've built equity. You've built equity, and that, in a nutshell, is property wealth. So, for those starting out in 2021, yes, buy-to-let is worth the hassle if you do it using the BRRRR method, so make sure you watch that video. But some additional tips you want to take into account is, number one, you've really got to do it within a limited company. All your property investments need to be within a limited company. If you don't, you're going to be clobbered by Section 24 tax. I've got a video on that. I'll put a link up. Make sure you watch that to find out what that's all about. But buy all your property purchases within a limited company. Tip number 2 for 2021 is learn all the rules and regulations around renting property in the private sector. The regulatory environment has got far more sort of cumbersome, if you like, in the last 10 years. There are a lot more rules and regulations than there ever were. It's your responsibility to educate yourself on what those rules are and to stay within them. Even if you use a letting agent to manage properties for you, ultimately it's your name on the land registry title deeds, and ultimately you're responsible for what happens in that property. Number 3. Pay special attention to tenant referencing in 2021. As I mentioned in the intro, rental defaults will increase in 2021. It's absolutely essential that you do your utmost to make sure you get grade A tenants in your properties. The more effort up front you put into tenant referencing, the less hassles you'll have with tenant management issues during the course of the tenancy. And my final tip for new investors is don't look at buy-to-let as a bit of a hobby. Don't look at it as a little bit of a pension or a sideline to have 1 or 2 properties. Property investment, buy-to-let property investment is really a go big or go home type of affair. There's no space for people that just want 3 or 4 properties. You've got to aim for this to be a significant business and to build a reasonable sized portfolio of at least a dozen or so properties. That way you have the economies of scale to make buy-to-let worthwhile. Listen, if you're enjoying this video, smash that like button. It means YouTube will show it to more people who are interested just like you. So that's new investors. What about existing buy-to-let investors who have small portfolios of residential properties? The government have made it very, very difficult for small-time landlords, particularly those who have 1 or 2 properties and they own them in their own names. They have full-time jobs and they're high-rate taxpayers. If you own your buy-to-let properties in your own names as private individuals, you really need to check out whether you can benefit from incorporation. Incorporation is basically selling your properties to a limited company so that you don't have to pay Section 24 tax on your mortgage interest, which can be crippling and turn property investment into a sort of negative sum game. Check out this video on Section 24 incorporation and whether it'll work for you. I mean, in a nutshell, you will need at least 6 properties to benefit from incorporating your portfolio. Now, it's not actually 6 properties, it's 6 tenancies. So if you have, say, 2 properties which are HMOs, and each property is let out to 5 separate tenants, then in fact you have 10 tenancies and 10 properties, if you like, and therefore you would fit the criteria to be able to incorporate that into a limited company. Again, check out my video on incorporation to figure out more information. It's going to be very difficult if you've just got 1 or 2 properties, because you may not have enough to be able to incorporate your portfolio. And as I said, if you're in a full-time job, you may find that your property buy-to-let is actually putting you in a loss. If you're in that sort of category, you've got very few choices, really. You can grow your portfolio, you can make it bigger so that you have more of a portfolio to fit the template so that you can incorporate. Or you may have to bite the bullet, sell those properties on and literally start again in a limited company. If you are thinking about selling properties on, do bear in mind that there are likely to be some changes to capital gains tax, which will particularly hit people who are selling properties which they own in their own name. Now, if you're in that category, you may want to consider those disposals sooner rather than later. Again, I've got a video on the upcoming CGT, capital gains tax changes, which you can watch in the description. Of course, if you have just got 1 or 2 properties and they are suitable for turning into HMOs, that is one answer. So if you've got a few properties, if you can make them into HMOs, in other words, let them out room by room, and you can have more than 6 tenancies, then you may find that you are able to incorporate. So I can't really sugarcoat this. It's a difficult situation if you own very, very few properties and you own them in your own name and you're in a job and you're a high rate taxpayer. The government is making it particularly difficult for this group. Tell me what you think, guys. Just comment below. Now let's look at the old timers. By old timers, I'm meaning people who have been in the property game for 10 plus years and have 10 or more properties, and they've already incorporated their portfolios into limited companies. So many people who have built portfolios over the years have done so using the BRRRR method. Now I keep banging on about the BRRRR method because it's the only way to sustainably grow a property portfolio. How do you get to 10, 20, 30 properties unless you have a ton of cash to start with? You do so using BRRRR. So if you take the case of someone who did BRRRR 10 plus years ago, so they've basically bought the property, renovated it, refinanced it, all of that sort of stuff. They've generated positive cash flow, but they haven't refinanced that property over the years. So if they've held it for 10 plus years, the likelihood is that the property value has grown over the years and it's built up quite a bit of equity in that property. Now this poses the old-timer investor a particular dilemma. Residential buy-to-let is hassle. If you're a brand new investor, you've done BRRRR, you've got little or no money tied up in the deal, then quite frankly, if you've got a free property, you're generating positive cash flow, your return on cash is near infinite, then the hassle's worth it. On the other hand, if you bought the property 10 years ago, it's owned in a limited company, so you have no capital gains tax on the sale. You've built a ton of equity in that property because you haven't remortgaged over the years. You then have to look at the rental return that you're generating in 2021. Look at the hassle factor of owning residential buy-to-let property and then think, well, is the rental return I'm making on that property worth it for the equity, for the cash I've got tied up in that property? Now, what I'm finding is many of those long-term landlords are actively considering making some disposals of those sort of residential buy-to-let properties which have a ton of equity tied up. And what they're doing is they're recycling those investments. They're kind of getting out of those residential buy-to-let deals which are equity rich and reinvesting those monies into easier to manage property assets such as commercial property. Now, if you're new to commercial property and don't know much about it, it's normally the next stage in the evolution of any property investor along their property journey. If you want to find out more, I run regular free webinars on commercial property investment. I've got one this Sunday. You can check it out on the link at the bottom of this page. So whether or not buy-to-let is worthwhile for you, worth the effort for you in 2021 is not a one-size-fits-all type of answer. It depends on where you are in your property journey. If you're a new investor, go for it, but do it under BRR because you'll have little or no money tied up in every deal that you do. You'll generate positive cash flow, and it's the best way and the best time over the next few years for building long-term wealth through property. If you've got one or two properties and you maybe have done it as a pension, you're in a full-time job, you have some issues that you need to crack. It may or may not be worthwhile to continue with that portfolio for you. If you're an old-time investor with a lot of equity, then you may want to think whether the return you're making on that equity is actually worth it and whether there are other easier to manage property assets that you might want to put your money into. So that's it on buy-to-let in 2021. Let me know what you think. Put your comments below and let's have a little discussion on it. See you guys in the next video.